getting my controls a little closer. There we go. Boom. Boom. Good morning, everybody. Hello and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I'm your host, Blind Run, which is my gamer tag, and yes, I did play some games finally this week. We played some Elden Ring. I'm also sipping on my coffee in the great Bitstream Tripping Coffee Cup. Go check out his YouTube channel, the original OG of cryptocurrency mining YouTube channels. I kind of get OG status too, a little bit. That's why we're here. It's awesome, but we got to give credit where credit's due. Bits and Carter from Bits is the primary, so make sure you go follow him over there. Quick note, I just thought for anybody who's trying to play Elden Ring that's having FPS issues, there is a piece of software called Flawless Widescreen that you can download that has the FPS fix in it. You don't have to play at widescreen resolutions to utilize the tool. I highly recommend checking it out. That's how I'm playing on my widescreen monitor for Elden Ring, and I'm getting 60 FPS locked. Now, a couple other notes about that, right? It can only work in offline mode. So if you were wanting to play online, it won't work there. That's unfortunate. Also, another note is Intel CPUs perform much better on it. That's just because this is an older game engine, and it doesn't thread well and play as nice with Ryzen CPUs. So that's pretty much it. I figured I'd let you guys know. I used to do like tech reviews and stuff and video game performance reviews. So when I get into the ones that I do here and there, I still tinker for quite a while before I actually play it to make sure it's exactly how I want it. So exactly how I want it, it's 5120 by 1440 at 60 frames a second. And of course, with all that stuff tinkered in and functioning right, and it's playing pretty good. I beat one boss so far and got my steed, the trusty steed, which I forgot the name of now at this point. But today's topics are going to be Team Red Miners releasing a new one. I want to talk about Braid Pool, which is supposed to solve decentralization for Bitcoin mining pools. Hopefully we'll see that coming around soon. We're also going to be talking about Bitstream mining to list on the Nasdaq. We're going to be talking about NVIDIA producing both 30 series and 40 series at the same time. Then we're going to be talking about the RTX 4090 rumored to use GDDR7. I did see someone already talk about that in chat. Don't worry, I got your back. Mr. Carter, Bitstream Trippin', has also just gone ahead and sent a good news tweet today. And it is in regard to ETH merge, the proof of stake merge, and some issues that's going on there, including attacks that are discovered so recently, it seems like that's going to be delayed. Then we have, of course, Biden issues a long-awaited U.S. executive order. We have the fact sheet from the White House pulled up here. And it looks like that's resulting in some bullish attitude in the markets this morning. So whatever he said either wasn't really effectual, didn't mean anything, or is positive. That's pretty much either or. Of course, with rising inflation, skyrocketing, I'm sure you guys are trying to fill up your gas tanks. I'm truly sorry to everybody that's trying to do that right now. I'm in the same boat. Then we're going to talk about Ethereum mining profitability, Flux mining profitability, and if everything goes the way I want it to, we may stay on a little bit longer, even past Q&A, to test out basically some spec mining, but we'll have to see how it goes. All right, let's get into it right after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options including wire transfers to easily receive your profits. Crypto.com also offers additional services including trading and even staking to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Oh, I let that go too long now, didn't I? All right, so let's hop into the first topic for today. We have a new release from Team Red Miner released 2 hours ago. Team Red Miner version 0.9.4.2. And there it is. Perfect. All right, let me expand this out just a tad. I've been staying up really, really late working on basically educating myself as much as possible. That's pretty much where I'm at. I want to get to the point to where we're educating y'all even more too. So I have to learn before I can educate y'all even more. So anyways, small fixes and added support for the tool and TH5355 FPGAs replaces version 0.9.4.1 due to a fixed regression bug. Otherwise, no changes. README highlights the GPU fixed ETH plus TON issue that could lead to higher ETH shares stale rate. Pretty much the same as yesterday, which is interesting. Okay, so what did they change here? So replaced due to regression bug for dual mining device selection. So specifically that, wait, hold on. So this is just the same patch, except they replaced it due to regression bug for dual mining device selection. So that's it. They had to update. We're on Team Nightly Miner, the red version, apparently. So there you go. Not too much going on. If you're having issues with ETH TON dual mining, you can check that out. I have in large part stopped dual mining ETH and TON. It's no longer really that profitable, especially considering the amount of wear and tear it puts on the GPUs themselves. Maybe if we were all submerged at this point, we could do it, but we can't. It is what it is. Now, if you guys are not familiar with Bitcoin mining in particular, it's gone through basically a lot of different stages. For a while, one of the concerns was, of course, centralization surrounding mining itself. And this was because mining pools were launching, everybody was hopping on the mining pools, and it looked really bad kind of for a little bit. And so what came out after that was something called P2Pool. And what P2Pool allowed you to do essentially, and I'm not going to go into crazy details. If you want a separate video, we could go over the history of Bitcoin mining and all of the details in this, but it would take me pretty much this whole hour to go through it, I feel like. So we're just going to kind of do the brief overview. The basic brief overview of P2Pool basically meant that you could stand up a node on your local network, mine to that, and basically still submit shares in a pool function. And then P2Pool would just pay you out to whichever wallet you selected or to the wallet that was built into your node. And that is essentially how it functioned, and it was for decentralization. Moving on from there, everybody kind of went back to the pools. It's more profitable, that sort of thing. And so we kind of are in this position where we're on flooded mining pools, and there are people looking for solutions. And one of the newest solutions is called Braid Pool. So I wanted to give it attention because I think that it's important to basically give as much attention to essentially decentralization options, furthering going into that direction as much as possible. So what I have here is just a brief overview of it. It was an opinion piece on Bitcoin Magazine, and it says Braid Pool, another iteration. So another iteration, this is talking about kind of the history, P2Pool payments, channel payouts, there you go. and then braid pool. So enter braid pool. And this is a PDF download from GitHub. I did have the GitHub. I tweeted it yesterday. But braid pool is a proposal from Bob McElrath and Kulpreet Singh. I think I can do the last name there. Building on Belcher's proposal using payment channels. There are two major channels introduced that improve on outstanding issues left with Belcher's proposal. The first is an alteration in how the hubs and miners communicate with each other. They propose having miners attach a Tor v3 address to each of the shares they broadcast to the pool. This way, the hub can operate without exposing any network endpoint that is susceptible to DOS attack. The hub operator can then connect to miners in order to open and update channels with them, alleviating the need for miners to use multiple hubs in order to avoid a single point of attack. This allows a braid pool to operate with a single hub, making the entire system more robust and capital efficient. The second change is the use of a directed acyclic graph, a DAG, instead of a share chain. The problem with the share chain was that with the 30-second share time target, the difficulty required for shares increased as the pool grew in size, making it more difficult for smaller miners. Using a DAG like Ethereum, where it is not a zero-sum game of single share, making it into the share chain and others being orphaned allows miners to dynamically set a difficulty for shares that can be adjusted based on the hash rate they have and how frequently they can find shares with it. The DAG structure includes everyone who has participated in it between actual found Bitcoin blocks, distributing the rewards proportionally between everyone based on work that they have provided to the DAG. This solves the scaling issue of variance for individual miners as the pools grow larger. Aside from these two changes, the rest of the structure is just like Belcher's proposal. The Coinbase and channel scripts are the same. Anyways, I think that overall, I have this link down below. Talk to people about it. Let them know. Go throw some likes at the GitHub. I'll link that later. You can also find it on my Twitter. So it's not ready yet. Essentially, the GitHub is a README with some code, but not really like accessible code. Other than you can get the source code, you can make commits, that sort of thing. You can't actually like build a package or anything like that. So kind of the way it is. Let's go ahead and talk about Bitstream mining to list on the Nasdaq right after I take a sip out of my BBT coffee cuppa. All right. The small miner has bought 5,000 used Canaan mining rigs and has an agreement to host Bitmain S19 Pros in Texas. Look at that. This is north. That almost looks like the same warehouse we were in with Pro Direct Mining. The latest crypto miner to go public in US-based Bitstream Mining as its owner, Agora Digital Holdings, plans an initial public offering on the Nasdaq. According to a Wednesday IPO prospectus filed with the Securities and Exchange Commission. Agora will list under the ticker DeFi with a pro forma total stockholders equity of $53 million, but has not announced the share price, the prospectus said. Agora booked a $3.3 million loss the 9-month ended December 31st, 2021, according to prospectus. The listing and ticker is still pending regulatory approval. Agora has invested $7.2 million to set up operations for Bitstream, including buying 5,000 used Canaan Avalon Miner 841 mining rigs for $1.35 million, according to today's filings. About $2.4 million of that was a payment to a power management firm, including a down payment to an energy supplier, said a September 2021 SEC filing. The firm has agreed to spend another $6 million to buy energy, order miners, and develop mining infrastructure, the prospectus said. Starting November 2021, 550 of the Avalon miners are in operation, the prospectus said. The firm expects to deploy Bitmain S19 Pro miners, currently one of the best on the market, through a third-party hosting service provided by Elite Mining by the end of Q2 2022, it said in the prospectus. ECO ARC Holdings, Zest, which owns 90.1% of Agora shares, will hold on to 74% of Agora's equity after the listing, said the prospectus. Approximately 3 months following this public offering, ECO ARC is what I'm going to call them, is expected to spin off 80% of its Agora stock it holds, 33,336,997 shares, to ECO ARC security holders as a stock dividend. After the stock dividend, 77% of Agora stock will be held by public shareholders, and the firm will act independently from ECO ARC, according to the IPO prospectus. Bitstream has signed a letter of intent with a power broker to obtain 12 megawatts of electricity in West Texas, and is expecting to buy another 48 megawatts in the next 6 to 12 months, according to the IPO. The firm has also signed a 30 megawatt letter of intent for a second site at an undisclosed location and is negotiating definitive agreements for energy. Under its September 2021 hosting agreement, Elite Mining will supply the Bitmain S19 Pro miners, host the data centers, and operate the machines. Bitstream will replace the Bitmain S19 Pros with its own as soon as it can fund them, including possibly buying Elite Mining's rigs, said the agreement. Though through the agreement, Bitstream would take advantage of 6 megawatts of energy worth during a beta testing phase set to last until mid-January of 2022, said the September filing. This really highlights essentially the way miners are acquiring space and power and not necessarily being able to fill it up all the way. And this is something I'm looking at as well. Personally, it's very difficult to do this. I know ProDirect, I talked to them, they're doing this as well. The strategy is get the power, get the infrastructure, build that out, rent that power and infrastructure out until you can build up enough to purchase all your own miners. And it's an interesting strategy because you basically are able to just start pulling rentals off or purchasing them from the people that are renting that space from you. You're able to utilize all the power, have additional revenue, and that sort of thing. So one of the things that I'm looking at, and I think like a lot of different miners are looking at too, is if we have additional power, but we can't afford the capital to fill it all the way up with mining rigs, whether that be GPU, ASIC, and so on, you could set up some sort of hosting facility and host it out, and being in the area you're in, if you're in a low cost power area, could be a business that is viable and is something to look into. So pretty cool. It's a lot of work. It's a ton of work. So I don't know if I'll ever get there, but I'm definitely trying. Let's talk about NVIDIA's hint about parallel RTX 30 and RTX 40 production has another hidden meaning, is what WCCF Tech, your favorite leak/rumor site, as interesting figure of speech spotted by Tom's Hardware, seems to imply that NVIDIA will be sustaining the RTX 30 series parallel to the upcoming RTX 40 series, at least as far as some bread and butter models go. The quote in question comes from NVIDIA CFO Colette Kress at the Morgan Stanley Technology, Media, and Telecom Conference. That said, there is also another thing that it heavily implies that I believe everyone has missed. Here is the thing though. It is even possible that NVIDIA will continue to produce some high volume RTX 20 series cards in the Lovelace era as well, and all of this makes sense. The GPU market has shifted significantly in the past few years, And where once old generation GPUs quickly lost their value, they now retain it for years to come, primarily because of crypto. The ongoing semiconductor crunch also means that GPUs are getting more expensive as upstream wafer manufacturers and foundries increase quotes for the GPU makers. Before we go any further, here's the quote in question. The COVID-19 pandemic and the supply chain issues it exacerbated gave NVIDIA an opportunity for gaming side of the business to sell both RTX 30 series and Turing architecture-based RTX 20 series graphics cards, Kress said. So we've been doing that to provide more and more supply to our gamers, Kress said. And we may see something like that continue in the future. It was successful with Ampere, and we'll see as we move forward. Now, here's the thing. Keeping multiple production lines across generations isn't something new. We've seen it before, and we should be very familiar to some of our older readers. Intel used to do this across its 3 product stacks, where the mainstream desktop, HEDT desktop, and mobility side of things would be on completely different architectures to not only optimize the economies of scale, but to spread out R&D retooling costs as well. The same holds true for NVIDIA as well, and with their parallel production of RTX 2060 GPUs. They are able to optimize volume for a major market segment, but there might be more to the story as far as the particular hint goes. That is where the second angle comes in. Intel and NVIDIA's historic use of parallel GPU production has always been restricted to a staggered approach, where the market segments were spread out across different architectures. This was done simply to optimize costs. All-time volume GPUs essentially came from the same wafer allocation. With NVIDIA getting ready to move to TSMC for their Ada Lovelace series, this approach presents another major advantage. They could continue to produce their high-end 3080 Ti and 3070 Ti GPUs, etc. at Samsung, and at the same time produce the 4080 Ti and 4070 Ti GPUs at TSMC. Since these are 2 separate foundries, producing 2 product lines will not eat into the same allocation at all. In fact, considering the market exists in a serious undersupply situation, there's no harm in going for this approach. The ridiculous advantage this tactic would give NVIDIA, both in terms of revenue and market share, means that I have a feeling we will see a lot more than just continued RTX 3060 production at Samsung. Keep in mind, there are some caveats associated with this bold, educated speculation. Firstly, upstream wafer manufacturers are running at 100% capacity, and the semi-industry exists in a zero-sum game, which might limit to some extent the doubled allocation theory. That said, the zero sum does not apply at micro levels when talking about specific products. For example, I doubt any of my readers care whether Samsung fulfills NVIDIA's allocation by taking away from some smaller players. What is incredibly likely is that Samsung will do everything it can to retain NVIDIA's account, and the company will very likely walk away with double allocation sizes. If TSMC, which is chocked full with orders, can make space for someone as big as NVIDIA, Samsung certainly can as well. So, what does that mean for the miners? That means more GPU production, potentially, hopefully, lower prices and access to previous generation GPUs for mining. And this may be something that is more enticing as we see the power numbers for the latest Ada Lovelace GPUs from NVIDIA being so high, from 450 to 600 watts at the top end, and a whole new PCI generation for, of course, the power adapters. So it may be a good idea for a lot of miners to wait and see, what this production looks like. That being said, the interesting point here is, of course, Samsung's capability of production versus TSMC's. And it's possible that if they're outproducing TSMC, the pricing on the latest generation may end up being super competitive to the previous generation. That in conjunction with the dwindling crypto markets and, of course, the threat of the merge from Ethereum means that on-shelf GPUs would probably start stacking up. We already see that happening. It's just the pricing really hasn't followed quite suit yet, We've seen about, another 30% reduction in basically MSRP costs, buying them off the shelves. That's good, but they have to come down lower. It's interesting. I think like part of the problem is, if they want to sell those old cards and they want to sell them to home miners, they're going to need to get rid of the light hash rate locks. And I wonder if that's something that is on the table for them right now. Like if they're doing bad enough and then they want to get rid of a whole bunch of old stock, remove that light hash rate unlock or lock, and then you're golden. We have more NVIDIA news. The next generation GeForce RTX 4090 rumored to use new GDDR7 memory. This is exciting for mining because it means that we might see some really crazy numbers depending on the speed. NVIDIA's next-gen Ada Lovelace GPU architecture is going to buck heads with AMD's next-gen RDNA 3 GPU architecture later this year, but now rumors on Ada Lovelace GPU side of things really heated up. In his latest video, Tom at Moore's Law is Dead said the next-gen 8102 GPU and other GeForce RTX 40 series GPUs could support next-gen GDDR7 memory. Tom said, quote, the memory controllers in Lovelace dies are vastly improved over Ampere, with 8102 being built to support GDDR7 memory speeds and possibly GDDR7 itself. The source continued, adding that the 8102 memory controller was designed to handle GDDR7 memory speeds, and that's at 32 gigabits per second. That's a 30% increase, boys, and possibly built around an early GDDR7 specification. It is unlikely GDDR7 will be ready for Lovelace's initial launch, but either way, NVIDIA will be able to use the fastest GDDR chips on the market in Q3. They will also have a pathway to a full refresh in 2023 with vastly higher memory bandwidth if they need to rush out the RTX 5000 series after defeat, just like Fermi. The timeline lines up as Samsung unveiled its next-gen GDDR7 memory back in November of 2021, which means if NVIDIA is able to get some GDDR7 memory at around a year after the initial release, well, we get to November 2022 and early 2023 when NVIDIA could refresh with the RTX 5000 series. I think we would probably see a refresh. Personally, I think we would see a refresh of the 4000 series, but now with GDDR7 memory clocking it at rather bonkers 32 gigabits per second, let's put that into perspective. The fastest GDDR6 memory modules that NVIDIA is using on its Turing-based GeForce RTX 3080, 3080 Ti, and 3090 tops out at 21 gigabits per second. That's near a 50% increase and should result, 30% increase. What is going on here? And should result in some truly next-gen 4K and beyond gaming performance and some massive mining performance. The power consumption's bad, but let's do a percent calculator just for fun and let's see what the top end would have, right? Let's go ahead and say, this is easy. We'll do this. 21 to 32, we'll get the exact percent calculator change. Okay, so result is 67. Hold on. So we need to do this different. We need to do 32, 21, calculate that out. All right, so they're right, 152% change. I guess yeah. I don't know why I was doing that wrong. 30% increase. 152% change. And let's just say we'll go straight for hash rate, right, on Ethereum. So what is 152% of 115 mega hash a second? That would be a result of 174 mega hash a second, provided, of course, the memory bandwidth is the same. Or bus size is the same, which would result in the calculation basically upping the memory bandwidth by 50%, and then that would result in 174 mega hash a second. There we go. That is exciting. That's pretty cool. What do I think is going to happen? I think we're going to see the refresh of GDDR6X, or not the refresh. We're going to see full GDDR6X memory speeds in the initial launch of Ada Lovelace. Meaning, I think we see like the 21 gigabits per second. We see that increase there. And then they refresh at the end of 2022 or into 2023 and start slapping GDDR7 on there. And that's where we're going to see how we're going to see this play out. That's my personal opinion. We'll talk and see what you guys think over here. Yeah, math is hard for me today. You know what? It is what it is. I've never said I was good at anything. Let's go ahead and get into basically Bitsby Trippin' posted this morning, and I told him I'm going to steal this for the live show. Let me make sure there's no cursing or anything in the replies. All right, cool. Bottom line, looks like ETH proof of stake merge is going to be delayed a bit longer. Here's the leak. Unless it gets this squashed pretty quickly, or this isn't a leak. This is a problem. Good find on Cornell. Good for you all. Good on you all for keeping the community informed. So what's happening, right? We got ETH getting delayed. Why? Well, here's why. This was submitted on the 2nd of March, 2022. This is very recently and very, very close. Very, very close to the proposed merge date, right? And that's a big problem because, as you can see here, this is on March 2nd, and it's 2 attacks on proof of stake ghost Ethereum. So they say here in the summary, we present 2 attacks targeting the proof of stake Ethereum consensus protocol. The first attack suggests a fundamental conceptual incompatibility between proof of stake and the greedy, heaviest observed subtree, which is ghost fork choice paradigm employed by proof of stake Ethereum. In a nutshell, proof of stake allows an adversary with a vanishing amount of stake to produce an unlimited number of equivocating blocks. While most equivocating blocks will be orphaned, such orphaned uncle blocks still influence fork choice under the ghost paradigm, bestowing upon the adversary devastating control over the canonical chain. While the latest message-driven LMD aspect of current proof-of-stake Ethereum prevents a straightforward application of this attack, our second attack shows how LMD specifically can be exploited to obtain a new variant of the balancing attack that overcomes a recent protocol addition that was intended to mitigate balancing type attacks. Thus, in its current form, proof-of-stake Ethereum without and with LMD is vulnerable to our first and second attack, respectively. You can go check out the links down in the description if you want to go over all of the data and, dig into it deeper. But for the miners and, everybody else, what does this mean? Well, the difficulty bomb is set to go off in June, right? And so the idea was essentially that proof of stake would need to happen by June. But as we've been seeing for the past 6 years on Ethereum, this is nothing new. We essentially have a difficulty bomb ready to go off, and they're saying they're going to get proof of stake ready, then something bad happens, and then they delay, and basically they do another fork, and they defuse the difficulty bomb, and then we basically have the amount of time till the next difficulty bomb goes off to continue to mine on the network or utilize proof of work as a consensus mechanism, and then they say that that's going to be the next release date. As we saw with, of course, Vitalik Buterin, earlier this, last month at this point, earlier this year though, he said some say June, some say July, some say August. At this point, this has to get squashed pretty quick, as Bitsby Trippin said, and I agree with him. Obviously, this sort of attack's not going to go well if it got released in this manner and the data is out there. People are going to manipulate it and it's not going to be good. Of course, we still have other problems on ETH, including MEV, which has never been solved. There are other coins that actually are built completely on the idea of basically preventing MEV. A perfect use case scenario, or a perfect release, excuse me, of a cryptocurrency right now would be, of course, something that is programmable as far as on the blockchain, that essentially has in some sort of lower fees, has a high transaction throughput, and basically blocks MEV. And then at that point, you know, maybe there would be a competitor. I think there's a couple out there. I won't name any specifically for fear of, you know, pumping and dumping or whatnot at this point. We could go over it in a different video though. Yeah. So what would that timeline look like? Because I know everybody's going to have that question. I have to say that I don't know. And I'm not sure anybody would know what the new timeline would be. I don't know what the default extension of a difficulty bomb is. But I assume they would pick the closest. So the last one happened in, what was it, November? It's been a while. When was EIP 1559? Oh, EIP 1559. When was the release date for that? It was created in April, was the first one. Anyways, I want to say it was like November, maybe it was earlier, August. Anyways, a few months, 8 to 12 months, somewhere around there. I'll get the details for another video. Maybe you guys know in chat. So I think we're probably looking at a delay at this point because of how close it is. How long the delay will be, I don't know at this point, you know. I would assume 8 to 12 months, but that's not financial advice, and I cannot be certain of that right now. And so that's pretty much where it ends for us as miners. You can continue to mine Ethereum. I think we're going to get past June pretty easily at this point. Yes, I think we're definitely past June. Let's say earliest August, which I don't know. Even that feels really soon. So let's talk about Biden issues long-awaited U.S. executive order on crypto. Federal agencies will evaluate their approach in 6 key priorities within the digital asset sector. Here's the takeaway. U.S. President Joe Biden will sign a first-of-its-kind executive order on cryptocurrencies on Wednesday, directing federal agencies to coordinate their approach to the sector. The executive order does not lay out specific positions the administration wants agencies to adopt or impose new regulations on the sector. One part of the order will direct the Treasury Department to create a report on the future of money, including how the current financial system might not meet consumer needs. So what we have here is the fact sheet as well from the White House. And let's go over this because this is the one we really want to get through. Digital assets, including cryptocurrencies, have seen explosive growth in the recent years, surpassing a $3 trillion market cap last November and up from $14 billion just 5 years prior. Surveys suggest that around 16% of adult Americans, approximately 40 million people, have invested in, traded, and or used cryptocurrencies. Over 100 countries are exploring or piloting central bank digital currencies. Stop. Don't do it. That's all. The rise in digital asset creates an opportunity to reinforce American leadership in the global financial system and at the technological frontier, but also has substantial implications for consumer protection. Here's where the fear mongering starts. We need to have a fear mongering tier list for cryptocurrency. That's what we need to create. I need to create that for you guys. What's it going to be? Consumer protection, right? Financial stability or instability, security, climate risk. They literally hit all 4 of these, bro, right here in one sentence. Financial stability, national security, and climate risk. There's literally all of your fear-mongering in one sentence. One sentence. This is exactly how our government is functioning with no sources cited, right? The United States must maintain technological leadership in this rapidly growing space, supporting innovation while mitigating the risks for consumers, businesses, the broader financial system, and the climate. And it must play a leading role in international engagement and global governance of digital assets consistent with democratic values and U.S. global competitiveness. That is why today President Biden will sign an executive order outlining the first ever whole of government approach to addressing the risks and harnessing the potential benefits of digital assets and their underlying technology. The order lays out a national policy for digital assets across 6 key priorities. Consumer and investor protection. Here we go. Just add it all. It's all the fear-mongering topics. Financial stability, illicit finance, U.S. leadership in the global financial system and economic competitiveness. Okay, well, that's not so much. Financial inclusion and responsible innovation. Specifically, the executive order calls for measures to protect U.S. consumers, investors, and businesses. We don't need your protection. And I was all thinking of Pink Floyd. We don't need no education. Dun, 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 dun. By directing the Department of Treasury and other agencies partners to assess and develop policy recommendations to address the implications of the growing digital asset sector and changes in financial markets for consumers, investors, businesses, and equitable economic growth. The order also encourages regulators to ensure sufficient oversight and safeguard against any systemic financial risks posed by digital assets. We want to tell you what you can and can't buy. And here's the problem. I understand that because there's a huge group of people that don't want to accept the responsibility for any of their actions. When they participate in scams, they don't want to accept their own responsibility and how their ignorance played a part. This is why when I get caught in scams or I do something stupid, I let you guys know. I am accepting responsibility for it and then letting the community know. If everybody acted this way, then we do not need government protections for this. But I understand why we have government protections for this at this point. It's just a little frustrating because it will get manipulated. Here's the next one. Protect U.S. and global financial stability and mitigate systemic risk by encouraging the Financial Stability Oversight Council to identify and mitigate economy-wide financial risks posed by... So we're just going to say systemic over and over again. They really love that one. Posed by digital assets and to develop appropriate policy recommendations to address any regulatory gaps. This one definitely will apply even more control. I feel like a lot of this is written very broadly so that they can essentially have an umbrella to kind of do whatever they want. Mitigate the illicit finance and national security risks posed by the illicit use of digital assets by directing an unprecedented focus of coordinated actions across all relevant U.S. government agencies to mitigate the risks. It also directs agencies to work with our allies and partners to ensure international frameworks, capabilities, and partnerships are aligned and responsive to risks. Cool. Just let's throw a huge old blanket over it to make sure that we can do whatever we want. Promote U.S. leadership in technology and economic competitiveness to reinforce U.S. leadership in the global financial system by directing the Department of Commerce to work across the U.S. government in establishing a framework to drive U.S. competitiveness and leadership in and leveraging of digital asset technologies. This framework will serve as the foundation for agencies and integrate this as a priority into their policy, research and development, and operational approaches to digital assets. promote equitable access to safe and affordable financial services by affirming the critical need for a safe, affordable, and accessible financial services as a U.S. national interest that must inform our approach to digital asset innovation, including disparate impact risk. Such safe access is especially, safe. Safe means centralized. Safe means tracking of all of your digital assets. Safe means invasion of privacy. That's what this means in this. The Secretary of the Treasury, working with all relevant agencies, will produce a report on the future of money and payment systems to include implications for economic growth, financial growth and inclusion, national security, and the extent to which technological innovation may influence that future. Support technological advances and ensure responsible development and use of digital assets. By directing the U.S. government to take concrete steps to study and support technological advances in the responsible development, design, and implementation of digital asset systems while prioritizing privacy, security, and combating illicit exploitation and reducing the negative climate impacts. Okay, so we're just going to say the same things over and over again. This one's kind of interesting, though, because it does say they will prioritize privacy and security, but whose privacy and security are they going to be utilizing that for, right? And reducing negative climate impacts, which we got, here's the big one. I'm just going to say it right off the bat before we read this. I am pro cryptocurrency. I am anti central bank digital currencies. Reason being, just essentially, is right now the way it functions is we have the Federal Reserve, right, that's going to be printing money, blah, 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 and then signing that out to banks. At least there is some sort of decentralization, not really true decentralization because they're all in bed together, but there is at least some sort of check and balance of basically federal government and banks and so on. The threat of a central bank digital currency means that you consolidate that into the Federal Reserve or into the federal government potentially, meaning that now you have a single point, a single entity that controls all transactions that happen across the entire country. And that is dangerous. That is the opposite direction of what Bitcoin is trying to go into. So when you hear central bank digital currency, back up, take a break. Explore a U.S. central bank digital currency, CBDC, by placing urgency on research and development of a potential United States CBDC. Should issuance be deemed in the national interest, the order directs the U.S. government to assess the technological infrastructure and capacity needs for a potential U.S. CBDC in a manner that protects Americans' interests. Once again, they got to protect us. We can't protect ourselves, blah, blah, blah. This is, you know, I do have to say, like, I used to, like, I've always grown up, and first of all, I've always had firearms growing up. I've always shot, all that sort of thing, but I always used to have kind of this, hey, should we regulate, you know, maybe firearms and so on, at least shut down like gun show loopholes, that sort of thing. And then, of course, understanding that further on. And I think as you grow as a human being, you kind of like shift through like your points of view on things. And there's a couple parts where I feel like I was completely wrong as far as the firearms argument goes. Leave the gun show loophole, put less regulations in. And the reason being is because what I see is a manipulation by the government to essentially use the word protect you. And the thing is that you can't do that in a country with hundreds of millions of people or in the world, right? And the best way is to enable your population to protect themselves, whether that be physically or financially. And that's really how this needs to be played out. And it needs to play out that way with cryptocurrency too. And so I kind of wanted to say that, but the order also encourages the Federal Reserve to continue its research, development, and assessment efforts for a U.S. CBDC, including development of a plan for broader U.S. government action and support for their work. This effort prioritizes U.S. participation in multi-country experimentation and ensures U.S. leadership internationally to promote CBDC development that is consistent with U.S. priorities and democratic values. The administration will continue to work across agencies and with Congress to establish policies that guard against risks and guide responsible innovation. With our allies and partners to develop aligned international capabilities that respond to national security risks, and with the private sector to study and support technological advances in digital assets. What's going on? Sounds like the U.S. government is definitely bullish on cryptocurrency technology. They definitely want to take it. They want to harness it for financial gain, but they also want to make sure they restrict it to the public to make sure they don't get the financial gain, baby. That's what they want to do. That's what they want to do. Now, why is this so broad, like we've talked about? Well, it's so broad because now they can throw in whatever little pieces they need on an individual agency level, and they will do it all under the guise of protection of the public. Let's just say it again. We say it all the time. With great power comes great responsibility. Spider-Man, right? What does Bitcoin give you? It gives you the responsibility of controlling your private keys, controlling your own financial autonomy, and the ability to transact peer-to-peer without the interference of a government or bank, other third party. Okay? That's what Bitcoin was created for. That's why it's here. If that is not the direction we go in with cryptocurrency, we end up with the exact same system that we have always had. Things like the 2008 financial crisis will continue to happen. It'll happen at an accelerated rate because they no longer have to print paper money. Not that they're even doing that anymore, but it becomes even easier to add to the amount of currency within circulation. And if we look into the past, whenever we accelerate the amount of currency in a society, that's typically near the end of whatever society that is. Even recent history with things like Venezuela, but we can go further back to the Roman Empire. And ever since the invention of currency, this is how it functions. All right. The only way to prevent that, and the reason why Bitcoin has a supply cap, is because it is intentioned to remove that factor from society, from economic situations. That's why it was created like that. And you need to understand that. And then if you don't agree with it, that's fine, but move into something other than cryptocurrency. That's the way it is. Let's talk about ETH mining profitability for the day. So yesterday we did really, really good. And then apparently they just hit a pretty big block on Crazy Pool, because this morning I woke up and right before the show at 9 o'clock, we were at 0.05 ETH and we are already at 0.076 ETH. So it's climbing pretty good. We have another 13 and a half hours to mine for the day too, and it's already done 0.07 ETH. Awesome. Yesterday we did 0.08 ETH. We are currently at a reported hash rate of 5.7 gigahash across 18 workers. And we are at I believe a hash rate for the last 1 hour at 5.67. And then for the last 6 hours at 5.8 gigahash a second. It is cold. The mining rigs are loving it, and I am absolutely despising it. But, you know, if my mining rigs are loving it, I'm good right now. We'll let it be cold for a little while longer. Let's talk about, of course, Flux Profitability. And essentially what we have here is current hash rate 218 solutions a second. The 24-hour average, though, 176 solutions a second. We added a 1066 gig into this rig, so it's 7 1063 gigs, one 1066 gig. There's about a 3 solutions a second difference between the 3 gig and the 6 gig, in case you were wondering. And then, of course, I can try to go into more depth. I'm just kind of trying to survive at this point with the amount of information inflow and how to get that out to the channel. So I try to share it during the live stream as well. Total paid is 10 Flux, and we currently have 4 Flux pending. I believe we're getting 3 coins a day. Yep, 3 coins a day. So $4.27 a day in the US equivalent. And we might not be staying on this very much longer. I'll be talking about that maybe at the end of the show. I'm a little hesitant, just to be completely honest with you guys, about talking about spec mining. I want to teach people how to do it, but there's a lot of problems with teaching people how to do it, how it impacts the coins that we're mining for spec mining, right? The potential loss if a whole bunch of people hop onto it and misguiding people, because essentially if you're spec mining, it's probably not going to be profitable. You just never know. And how complicated it is, and the security that surrounds it that you need to be aware of, to be careful. And we're talking about like a lot of infrastructure information, whether you're going to go with like a VPS and open ports so that you can mine externally, or you're going to do something internal, what your best internal options are, whether you're going to do it on Windows or Linux. Pretty much always Linux, in my opinion. Let me know what you guys think. I was trying to figure out a way to just say, hey, here's like a broad overview of like spec mining and what you're looking for. You're looking for a node, you're looking for a guide. You need to get the node synced. You need to create custom flight sheets that point to whatever new miner specifically is within Hive OS, and they can pull that from GitHub. These types of things. So very brief guides that give you an overview top down of what you need to be looking for, as opposed to basically very specific things. So let me know. That's kind of the idea that I'm going down. We have DJ Mines in chat. Make sure you guys go follow DJ Mines on YouTube. Go ahead and post your channel, Mr. DJ. Good to see you here, and thanks for being here and joining us. All right, let's look at mining pools. We got Bitcoin at 204 exahash a second. Is fully recovered from its previous dip down below 200 exahash a second, but no changes since yesterday. Let's take a look at Ethereum. As always, should be around 1 petahash. Still right around 1 petahash. No changes in Ethereum. Now let's take a look at Flux. And on Flux, we are seeing 2 mega solutions a second. A little bit up from where it was yesterday. However, still down from like its average of 2.5 mega solutions a second. I was hearing reports that solo rentals were not happening. However, I am seeing solo rentals happen right now. We're talking about a 31 kilosouls on the 8th. We had 13, 15, and then a spike here just recently today, back up to almost 30 kilosolutions. Miner pool's not getting any of them. 2 miners isn't getting any of them. It looks like solopool.org is getting some rentals from NiceHash specifically. That does remind me, we were forgetting to look at what to mine. And I think that's important. So let's look at the profitability for the 3090. Let's correct the Zell hash. And the reason for this is we want to confirm that. And yes, as you can see, NiceHash is more profitable for Flux right now. Right now at $2.51 a day after power. If you were to mine Flux directly, it's at $2.47 a day after power. Ethereum at $3.71 a day after power. Conflux at $2.18. That one's interesting. We're going to look at that too, because I'm hearing that there's solo mining going on Conflux and rentals there. Unfortunately, I don't think that there's a NiceHash rental number for that. Oh, wait, no, it is down here. NiceHash rental is actually significantly lower than mining it directly, so it doesn't seem to be the case. Ethereum Classic, $2.15 a day after power, and Ergo at $2.26 a day after power, actually more profitable than ETC hash. Firo, $2.12 a day after power. Ravencoin, $1.69 a day after power. And that pretty much covers all of those. We can look, of course, at the 2080 Ti, which traditionally is more profitable. on Flux and calculate that out. And once again, of course, the nice hash is more profitable than mining directly. However, ETH is still more profitable at $1.73 a day. So there you go. Let's continue looking at our networks. Cortex is going to be an interesting one. Or was it Conflux? Conflux, right? Yeah, Conflux. My bad. Cortex. No. Conflux. Yes. I get them mixed up. Conflux had some rentals going on, maybe on Nanopool, but there's no solo Conflux either right now. You could build your own node and do it though. 415.75 gigahash a second. Difficulties remaining steady. Ravencoin. Still under that 4 terahash a second. It does still seem to be like settling in around 3.5 terahash a second though from yesterday, with difficulty on the decline. Needs to decline a little bit more hopefully to get it leveled out. Let's take a look at Ergo. And that's at 14.36 terahash a second. No real changes. Taking a look at mining profitability for the day on mining pools, specifically Ethereum. For the last 90 days, mining pool hub in first, flex pool in second, crazy pool in third. For the last 60 days, mining pool hub in first, flex pool in second, crazy pool in third. Last 30 days, ZET in first, mining pool hub in second, flex pool in third. Last 21 days, mining pool hub in first, ZET in second, crazy pool in third. Last 14 days, ZET in first, and mining pool hub in second, crazy pool in third. Last 7 days, ZET in first, mining pool hub in second, crazy pool in third. Last 3 days, it remains the same. And for the last day, as I was stating, it looks like we hit a big block over on crazy pool. It's in first place and it beats out ZET, which takes second, and mining pool hub in third. Now, mining pool hub has been proving to be more profitable, but why don't we mine to it? Why do we mine to crazy pool instead? And these are decisions that I make from a principled level, and we'll talk about them. I am not doing it right now with pooling, and I should. I'm looking at that, but mining pool hub is KYC, meaning that while it's not full on KYC, it does require an email, which means there is some tracking going on there. You can spoof an email, blah, blah, blah. I'm fully aware of that, but the fact that they even require it is a no-go in my humble opinion. So that's kind of where we're at as far as that goes. Let's look at Asic profitability for the day. And we have the Kadena miners still taking first place, up about $10 since yesterday at 130 US dollars. Everything's up in the markets. We have the KD5 coming in second, L7 coming in third. And then from there, we do have the Z15 still popping up. We have the Antminer D7. Interestingly enough, Komodo is on the list here at $18.95 a day on the Z15. Interesting project. What Pirate Chain is built on top of. We've talked about Komodo in the past. If you want to basically build your own coin and experiment with it, building it within Komodo can give you that early security, which is really good. Because essentially, if it's a chain or a side chain of that, it gets the security from Komodo without people actually directly mining it. It's pretty neat the way Komodo works. S19 Pros at basically $16 a day, $17 a day. I think it's a little higher than that. I can't tell you exactly because, unfortunately, we are still waiting on the power supply replacement from CoinMiner. And BT Miners has done a good job helping out there, but we're still waiting on the replacement. Are there any sales? And it looks like we have dropped under the $10,000 mark on the S19 Pros. Boom, baby, $9,900 for an S19 Pro 110 terahash. So we have dropped another $600 on a Bitcoin miner. Very happy to see that. Have we seen any other price drops here? Let's take a look. Not really at this point, no. No other real price drops at this point. That's the only one. I am going to real quickly hit the restroom because I've been drinking coffee, and then we'll get into questions and answers. I'm going to go ahead and also refill my coffee so we can sip. Questions and answers go in this direction. Super chats are first to get answered. We have a huge one from CMG Computer Support for $100. Says, cool, my GPU. Says, hit the like button. So thank you, my good sir. Also, actually, I was experimenting with your plates this week. If you guys are interested in cooling those 3080s and 3090s, definitely check them out. All right. Let's scroll up and get through some of these and get the answers done. The Shed, $2. Please make lighting better. Your face and room. I feel like the lighting's pretty bright. We can go up a little more. It's so bright. I need to put sunglasses on. All right, and let's see other questions that we got. Johannes, what's going on? Thanks for joining. CMG, thanks for joining. Mario, thanks for 2 months. And congrats on making it to half a gigahash. Billy, welcome. Thanks for joining. We have a new membership, it looks like, as well. Cool, my GPU. Welcome. Thanks for joining. And let me scroll up and start looking for questions. At Son of a Tech for questions. It's all good. Mining said, Son of a Tech, looks like EIP 1559 went live around August 5th. So it'll be August, September, October, November, December, January, January. Yeah, 5 months plus the 6 months. It's 11 months. Yeah, 8 to 12 months if they go ahead and defuse this bomb. It's difficulty bomb. Nicholas Kane says, Ask on the Tech, possible Ethereum merge delay. I'm guessing all those that threw money at the ETH Asics just took a huge sigh of relief. Yeah. Paul says, Ask on the Tech, dark mode on the left side of what to mine website above the 2 T's, or which WH website? I don't know which one that was. I don't know what WH is. Oh, the White House website. White House has a dark mode. That's fun. There you go. All right. It's all good. Says, as some attack, the White House is using word salad to confuse people as they try to limit effectiveness of crypto, which they are quickly realizing they cannot control. And let's not forget taxes. Of course, they got to get the taxes in, right? Golden Wolf says, Assalamu Tech, good morning from Seattle. Good morning, Golden Wolf. Always good to see you here. I'm going to move the chat over here so it looks more natural, yeah? Yeah, except now it's hard to read because the light's so bright. Let's see. Assalamu Tech, this has been the best show. Really enjoyed it. Awesome, DJ Minds. Thanks, dude. It's all good. Mining company says, at Son of a Tech, Ethermine seems to be suffering for the decision to block. They've been dropping day over day, although they are still an 800-pound ape. Yeah, I mean, the best thing we can do is keep encouraging miners to move to mining pools that do not participate within censorship, period. End of story. It doesn't, like, the fundamentals matter over your emotional response to what's going on in the world. And the reason why essentially that functions that way is because we are not participating in crypto to continue the status quo. We are participating in crypto to change the status quo. And as such, what that means is that we are no longer looking at things from the point of the view of governments, etc., or government structures or geopolitical. We are trying to take that down to the individual level. That autonomy, the same thing I talked about with firearms earlier, that sort of those ideals, individual freedoms, etc. Daniel Ring says, I'd love to get your broken koi PSU to see what failed in it. I don't know if I have to ship that back or not, Daniel, but I'll let you know because we'll be doing a video on it. Dave said, ask Tech regarding the principles of crypto, feelings on mining, not ETH coins to support them. And that's a valid point. That's one that I struggle with too. Problem being is we can't all do that, right? And then on top of that, you could support the networks in other ways. Definitely like don't only mine Ethereum, I think at this point. But we are talking about, once again, an 800-pound ape, unfortunately. And we are still trying to make sure. Scott Schultz says, WTF is that painting on the chair? That's Elon Musk, bro. Holding the Doge. And going to Mars, bro. With a Bitcoin necklace. Yeah. We have a $50 donation from Cool My GPU. Says, here's some more, brother. Thanks, man. Holy crap. And hit that like button, guys. I think we hit a huge peak concurrent viewers, so that is awesome today. Thank you guys for the support. I did want to mention we are down 30% on views. Basically, you can tell exactly when it happened, and it started happening when I started harping on, well, it actually started happening very clearly when I addressed Flexpool's decision to turn off mining to Russia. Now, part of that is going to be people that disagree, so I fully understand that. And part of that is we've also been talking about, less algorithm-friendly topics or points of view. So if you guys do believe in decentralization and in this battle that's going on, definitely share these videos out and definitely help me out, because this is where we're at. And I think it's going to continue. So we also have a backup on Odyssey. So if anything happens to the channel, we're on Odyssey, and all of the videos will begin to be posted there, and they support live streaming now. So live streaming will be done over there. Let's see. Scroll down. All right, I think we found it. Nicholas says, what is the R word? I can't say it on here, but you know what I mean. Daniel Ring says, Son of a Tech, I'd love to get your broken koi PSU. We already did that one. Dave, regarding your principles of crypto, we did that one as well. All right, we did that. All right, I'm back. I figured out where we are in chat. So Dan Sand says, did you stop TON? Why you don't use two miners? Yes, I stopped mining, dual mining TON, because the amount of the requirement under the GPU obviously is much higher, so it's going to reduce the lifetime of it, because you are mining on that core, and the profitability wasn't enough to really compensate that, in my humble opinion. Now, we also have heat issues going on because we're in Texas and starting to get warmer out. And then why I don't use two miners is primarily because I don't have as good ping as I do to Crazy Pool. And Crazy Pool does seem to be more profitable at this point. DJ Mines, Divine Cold. How cold is it here? I'll tell you. Hold on. Cold enough for my toe to hurt. 54 degrees now, but it's been getting into the 30s at night. All right. Oh no, it jumped on me. Christoph says, outside of tech, have you heard of the latest 3080 versions being more LHR'd to 60 megahash a second? No, I have not. Xcraft LLC says, outside of tech, do you think it's worth taking apart 1-year-old 3090s and replacing the pads with K5 Pro and putting on Kingpin grease, etc.? Like it actually helps hash rate or longevity that much. Yeah, if you are having hash rate issues on your 3090s, then obviously getting the best available pads and grease is advisable. If you're still, above that 110 megahash a second, I don't see a reason why you would do it. Yeti Crap says, outside of tech, current list of mining pools that currently align with the morals. I'm working on that. 2 miners seems to not have made anything. Hive doesn't. Crazy Pool doesn't, and then a lot of the smaller pools seem to not be, but it is what it is. I got to go through all of them at some point. That is a list that I do want to make for the channel. It's all good, says outside of tech. How are you getting payouts from Crazy Pool to minimize fees? They use the BSC network, Binance Smart Chain. We talked about it yesterday. I'll show you here. Where is it? Let me make sure. There we go. So if you take a look at their portal on their settings side, you basically have mainnet or BSC. It's 0 fees and it pays out every day. So no fees. And if you mine to like MetaMask, you'll have to add the RPC URL, or alternatively, if you go direct to Coinbase or crypto.com, it'll just show up as regular ETH in your wallet. So that's pretty much where we're at. Joshua Renner says, ask Tech, if energy costs start to outweigh mining profits, what will you do? I think I'm probably pretty good for quite a while because my energy costs are so low. The question would be if I can cover rent, right? And if that happens, then look, a lot of people seem to, I'll give you a little bit of background for me so everybody understands. It's funny because my wife has even pointed out to me, like, I am constantly reinventing myself and changing what I do. She calls me like a cat, like with 9 lives. Currently, I'm probably on like life 4, where I can completely shift into pretty much anything I want to do, whether was working on motorcycles, working in IT, working on cars, doing YouTube, whatever it may be. So I can shift and I'm not afraid of change. I think that is why I am able to do the YouTube thing and the mining cryptocurrency thing right now, is because I'm not afraid of that change, right? And really when you start getting stuck is when you stop trying to learn new things and do new things. Who knows? Maybe I'll just be a professional jiu-jitsu fighter in 10 years. Well, it is what it is. I usually will do that though. So when I was working on motorcycles, for example, I was studying IT at night, right? And working on that. When I was working in IT, I was working on a YouTube channel for 10 years. You kind of got to do 2 things in conjunction. So you get really good at one thing, and then while you're working that to pay for your bills, you're working on another thing. And like right now, I make that joke about jiu-jitsu because I'm doing the YouTube thing and the cryptocurrency mining thing. And then in the background, I'm, practicing jiu-jitsu, and that'll take another 10 years. And then if I do that for a while, then I'll move around. That's kind of how it is. I think even we had somebody trying to diss me saying that I'm a one-trick pony, and I kind of chuckled because I know personally that that's not true. I can do anything, and you can do anything too, but you have to work at it. And you have to keep trying. So to reinvent yourself, it takes decades. But there is always that light at the end of the tunnel. You just have to get up and do it. Detroit Iris says, Ask Tech, ping versus supporting decentralization. If it's under 60 milliseconds, just support decentralization. You know, if it's over 100 milliseconds, then we're talking about, you know, for your profitability, make that decision. The Last Gamer says, Ask Tech, have you tried jumping into nodes? I have nodes, but I've been building nodes for a long time, but I don't like, as far as like, if you're talking about master nodes type things, we do have guides on the channel where I have done those in the past. I do want to build a Flux node. I have to save up a little bit. Mike Wright says, Ask Tech, is the new Ergo monetary policy already in effect? I was confused when it started or when it starts. That's a good question. I'm actually not sure when it starts either. I thought right now, I think we could go to get block, right? Let's see. So if we went to get block and we did, no, getblock.io. Is that right? There we go. Let's see. Might have to go to, let's go to Ergo. Let's hit hero miners because we can probably see what the blocks are. Where's the block reward? Doesn't look like it's into play because what we're seeing here is 66 block reward. So not into play. I'll try to pay attention to it and make sure we're aware of when it comes up. But as of right now, no. Paul says, can you do a video on setting up Crazy Pool and BSC payouts if you haven't already? Yeah, no problem. 3 Design Nerd says, Ask Tech, should we be worried that Ethermine gets close to 51% of the hash rate on ETC sometimes? There's always been issues with Ethereum Classic and attacks. I think pretty much when it gets to the point of ETH moving proof of stake, it's a non-concern, a moot point. But right now, yes. Jeff Rodriguez says, 10 years from now, we'll see you as an MMA fighter on pay-per-view. Ismail says, Ask Tech, thank you, bro, for your raw and no BS content. Anytime, that's what I'm here for. ACQ says, any thoughts on experiences, tips for buying hash rate on NiceHash for Ethereum? No, I don't have any. Just good luck. I've done it before, but every time I rented from NiceHash, it was specifically to start a pool. So if you guys aren't aware, I used to run pools. And one of the hard part about running pools is when you first stand up the pool, getting people to mine to it. So to make sure payouts are working, distribution is working, that sort of thing, and not necessarily having to get people to mine it, what I would do is I would basically put my rigs at it. And this is when I only had like 3 rigs, right? So I'd throw like 3 rigs at my mining pool, and then I'd go take some NiceHash, and for testing, I would mine to my pool and then make sure the payment processing was working, etc. And that is the only reason or experience that I've ever had with NiceHash and renting hash rate. Danny Ring says, Ask Tech, amen. Out of my short mining experience, I've learned the skills of repairing electronics. It's something I never thought I could have done before. Heck yeah, man, you can do it. All y'all can do it. Chatbot says, Ask Tech, those Conflux solo miners have been hitting Woolly Pool sporadically. There's currently one on there now, like 75 gigahash. That's interesting. Scott Schultz says, how about NiceHash competitors? Mining rig rentals is the only one I'm really aware of. So that's all I really know about at this point. All right. So what I have been doing is setting up a node for a How many viewers do we have in here right now? All right. We're going to do a huge disclaimer. Do not do this. Please do not do this unless you just want to do it to learn. All right. I've been setting up a node to mine or spec mine a coin called Caspa. It's not listed. It's literally you make no money for mining it. Okay. Literally. You make no money. Don't do this. You make zero money. If you want a guide later, I kind of want to do a guide because it's fun. It brings me back to the old days. But what I want to do is see if our node is synced and that sort of thing. So here's Caspa. Look, even the website's trash. You guys don't want to do this. So to give you guys a brief overview though, Caspa is a proof of work cryptocurrency which implements the GhostDAG protocol. Unlike traditional blockchains, GhostDAG does not orphan blocks created in parallel, rather allows them to coexist and orders them in consensus. Whereby our blockchain is actually a block DAG. You can see GhostDAG in action in real time on the visualizer there. This generalization of Nakamoto consensus allows for secure operations while maintaining very high block rates. Currently 1 block per second, aiming for 10 seconds, dreaming of 100 seconds, and minuscule confirmation times dominated by internet latency. The Caspa implementation includes a lot of cool features and sub-protocols, including reachability to query the DAG's topology, blah, blah, blah. Caspa is a community project and completely open source, no central governance, no business model. Thanks Bitcoin, Litecoin, Monero, Grin, and Caspa. Think those. The mainnet was openly launched without pre-mining or any other pre-allocation of coins. What they have here essentially is the instructions to mine it. You have to set up your own node. It's something that I've been working on. And we are trying to get our 1063 gigs on there. So what I'm going to do is just see where we're at with the node. Hold on. Oops. We'll kind of chill out here for a second. So let me make sure that's all hidden. Blah, blah, blah. All right. So 1 second. Let's see if I can make this work and still be safe. That's kind of the goal. All right. I think that is good. Okay. So, we set up a Caspa node over here. We can connect to it with Putty. All right. So let's reattach this screen real quick and see where we're at. 16.134. Looks like it failed, so I have some work to do. Dang. Yep. Okay. So it's something I'm working on. Clearly something wrong happened there. I thought it was going to sync overnight. It clearly didn't. So I'll get in there, and then I'm working on a guide for it as well. Bummer. All right. You need an option for keep calm, mine on shirts, white on black. Yeah, I can work on that, Blasphemous. I have to invert the image. We do have a new one. We do have a new shirt. I'm still waiting on it from, let's see if I can do this, Teespring. But I don't think it's available yet. Let me look. Customize. Keep calm mine on. Blah, blah, blah. Oh, it is in. Cool. So for your white on black shirts, if you're interested, we do have a new shirt. And I just saved it. Let me make sure it works over here. I do not have my sample yet. I ordered one, so I have one on the way. And it is the it is not up yet, but it should be up soon. It'll be under the channel, and it is the design I made a little while ago, a couple days ago. It takes a little while for it to like apply. I believe this is the store though. Yeah, it's not up on the store tab yet, but it is straight out of Power. Like it's the straight out of Compton design, but it says straight out of Power, and the Alda has a an L630P plug for the 0 or the O, and it has the amp symbol for the A. So it's a pretty cool design. That'll be available and up on the channel here soon, so keep an eye out for that one. And that's already black on white by default, or white on black for default. There you go. Oh, Gandalf Gray says, ask Tech if profitability was not a concern. What GPU network would you prefer to support with your GPU hash? So that's an interesting question, because from the perspective of the GPU and the longevity of it and algorithm wise, I would look at Ergo. From the I'm bullish on it and I think it's super cool and I hope that the technology goes somewhere, it would be Flux. And that would be about it. I'm curious as to why this is not syncing. Let me turn this on real quick. Gracefully shutting down. Do it without the UTXO index. Huh. We're getting connections now. So I just restarted the node Oh, and then it disconnected again, but it's not long enough for me to read what's going on. I'm going to have to go get in the Discord. Brett Williams says, what do you recommend, Ledger or Trezor? I've been recommending the Trezor personally, but I also have a review for this coming up. It's the Stone V20 from SecuX. Well, it's really big, but it looks cool. So we're looking at this one soon for a review on the channel. Aha says also, does a good ping millisecond... Okay, hold on. Is 24 to 28 millisecond ping to two miners good? Yes. And also, does ping millisecond differ from pool to pool? 50 milliseconds is better than... No, the lower is always going to be better. That being said, there's a point of diminishing returns pretty much under 60 milliseconds. Fabian, I just scrolled up. I was trying to find your question. It says, hey man, I have a 6 gigahash mining farm. I would love to scale up from here, but I don't know if it's going to continue after ETH 2.0. None of us know. I mean, you're asking questions that, like, look, I will let you know what I'm doing when I do it. As I've said before, we're currently diversifying into some Bitcoin Asics. So that's what I'm doing. I have less hash rate than you. Like average was 5.8 gigahash a second right now. Granted, some of those GPUs are on different networks. Granted, I also have other Asics going, but that's where we're at. But there's no way for me to predict what the price points are going to be on other GPU mineable coins post ETH 2.0. There's no way for me to predict even when ETH 2.0 will happen. As we see here, we can kind of, like we've talked about it today with some of the issues going on with proof of stake and clear issues with the protocols there and vulnerabilities that looks like it's going to get delayed. Xcraft LLC says, Asavatech, do you have all your equipment expenses under an LLC or some kind of business? Yeah, I have two LLCs, one for YouTube and one for mining. Dan Sands says, Asavatech, does 2.0 and activating difficulty bomb is the same or different things? Different things. So, and we have, I've covered this so many times over the past like 6 years or whatever, but essentially, the difficulty bomb was put into place to force the developers to move to proof of stake. That was the entire intention of the difficulty bomb. What happens when the difficulty bomb goes up is that the difficulty on the network increases exponentially ever since it goes off, right? And the problem is that then people stop mining it because it's too difficult and essentially they lose their security. This was supposed to incentivize the developers to release it before the difficulty bomb went off. What they ended up actually doing is figuring out a way to defuse the difficulty bomb so it never happened. So every time they defuse the difficulty bomb, you can be fairly certain that we have longer to mine. So when they defused it in August, we knew that we had until June, the next time that it went off, at least until to mine. If they diffuse it again, like let's say on June 5th, they diffuse it again, then we know we have 8 to 12 months or whenever that date that the difficulty bomb is set to go off on, we have that much more long to mine, at least, for the most part. They could, in theory, release it earlier before the difficulty bomb goes off, but at this point, the track record has been delay, 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 delay. Charles says, Ask Seven Tech, how many ASIC miners do you have now? Which ones do you end up getting? So I don't have a ton. I have a lot of the mini home miners from Gold Shell. I wish, I'm always jealous. I'll tell you guys this. I am always jealous of like Red Panda and Vosk getting free Gold Shell miners. It's okay though. It's fine. It's fine. I've purchased all mine. But I got the only one I got from free was actually directly from Vosk, which was really cool. But he sent me the Dogecoin, the mini Doge miner, which really doesn't do that much. Then we have the LBC. I bought that because I want to support library, especially as a content creator. And I will probably buy more LBCs because while they aren't that profitable, I support Odyssey and library. Okay. I want to make sure that network is working good because they are my fallback if anything goes wrong with YouTube. Then I have a handshake miner from the HNS box. That one, not the new one that Red Panda just got, which I want that new one. Unfortunately, my profitability on my HNS box is about to tank, but the profitability was pretty good on those. I like that. Those are all running off the same power supply. The great thing about the minis is like I have one 1200 watt power supply powering 3 mini miners. It's awesome. So other than that, we have a Z9 mini, and that's not very profitable, but it is supporting Pirate Chain for the privacy at this time. I may switch it directly to Komodo, especially seeing the increase in profitability on Komodo that we saw today. I also really like Komodo as a platform. I got to spin up a chain myself and play with it before, and I thought it was really cool. And then on top of that, we have the L3 Plus, which is doing very well in Dogecoin. It does like 60 Doge a day, and it merge mines Litecoin as well. So that's been really good, especially because I picked that one up for like $275 last year. So it's well overpaying itself off. And then we have a Coinminer C16 Pro, which is dead right now and needs a power supply replacement that we just recently did a review on, and we'll be talking about it dying. So Dylan Ambrose says, Ask Tech, when can we purchase the Intel Asics? I don't think that we're going to be able to purchase Asics. I know we won't be able to purchase Asics directly from Intel. So they're going to be selling the hash boards. Then third-party manufacturers, similar to the way GPUs function, third-party manufacturers will then basically buy them, and then they will implement them into their own individual miners. So it'll be like an AMD Intel, or not AMD, sorry. It'll be like a, like a Gigabyte BMZ2, right? I'm not saying Gigabyte's going to do that. More than likely right now, like it looks like Block is buying a lot. So it'll be the Block BMZ2, right? And then you'll purchase basically from them. Now, what's going to happen too is amount of hash boards, because the BMZ2 will be like a single hash board. So then you might have like a 2 hash board variant, a 3 hash board variant, a 4 hash board variant, etc., just like you do with the current ASIC miners. And then the problem is right now, all of the third-party manufacturers are cutting deals with large farms. So they do this because they want to ensure that they're going to get the profit off of their purchase. So they partner with a large farm. The large farm tells them, we're going to pay you this much for this many miners. Then they purchase the necessary amount of boards directly from Intel, manufacture the miners, and then sell those miners to large mining firms. Right now, to my knowledge, there's not a third-party manufacturer that is selling direct to consumers. Huge market there, but a risky market. So you need to take this into account. It's a huge market, but a risky market, because if you're going to be manufacturing third-party Intel ASICs, your goal is to manufacture them and get them sold as quickly as possible. Therefore, you're going to cut deals with large mining farms. If you decide to manufacture for direct to consumer, what you're going to end up doing is having basically stock in a warehouse, because you have to keep stock in a warehouse, which means that your warehouse costs are going to go up, right? Because you're keeping it in stock. Your profitability is going to be slow because you're selling usually 1 or 2 units at a time. The price that you're going to be asking is not going to be competitive. So large farms and large firms are not going to be purchasing from you. And the risk is exponentially more difficult or higher compared to, of course, the way it's going to function. So early on, purchasing Intel Asics is probably not going to happen unless you're dropping even more than like the small mining firm we talked about today in West Texas that's buying like 1,000 for 1.5 million. Like even that's probably not big enough. We're talking about large tens of millions of dollar investment on these things. And that's the way it's going to go. So dark inversion, thank you for the 279 Canadian, says, how do you feel about Ravencoin these days? I mean, layer 1 asset integration is awesome. It needs to be easier. Are people going to adopt it? Is it a little too late? What we've seen here recently with NFTs is a sharp decline. That's why Ethereum mining profitability is lower and so on. People are kind of, I think it hit tax season. Maybe they realize the tax implications of NFTs and they're scared from that perspective on capital gains, etc. Personally, I got to file a loss on capital gains because that's one of the perks of mining, by the way, is like if you are just selling to pay power, a lot of the times you accumulate a loss. It's an easier way to run a business than just trying to get an increase in value, right? Because if you get an increase in value, then you got to pay those capital gains tax. So it's kind of an interesting, as I play with the taxes and like learn more, it's really interesting the tax advantages you get for mining over investing. Impala says, Ask Savatek, can you confirm that BSC payouts to Coinbase will show as ETH? I can confirm for crypto.com for sure. I will send a payout to, I'll work on sending a direct payout to my Coinbase to confirm for you on my end, but I've been told that yes, it does. Yes, it does. All right, guys, I'm going to hop off because I got to clip some videos and then I got to go run and head out for the day. And then I also have to figure out why my node's not working as well. So I need to hop in their Discord and see if they can help me out. Thanks for watching. Be sure to hit the like, comment, subscribe, and the notification bell if you enjoyed it. Please share the stream out with all of your friends and family and anybody else that's interested in cryptocurrency to get the perspective of cryptocurrency that is pro decentralization and based in the fundamentals and principles of crypto. I will see you next Tuesday.